Keletso Magano Matsi, of course, our organizer, Stembiso. Welcome to you all. Tendai Mtangi out there in the States. Welcome to you, my brother. Ladies and gentlemen, it's 5 o'clock on the 22nd of November. Your attention is always much appreciated and enjoyed. For the past year, the great work done by Matsi and the team at Academy of Construction and Real Estate have put together a platform that we've been participating on and reaching out and having conversations that matter with Africans in the built environment. Thank you so much for your time and your subscription and your attention. I'm going to give it a few minutes for some of those who had already confirmed to join on. I appreciate you and I thank you for honoring the start time that we said we would. So today we're going to be having presentations from our friends, for me, just across the border to my west from Botswana. We also have up north, we've got a Ugandan presentation. Then we will have South Africa joining us down from the south. And unfortunately, our Nigerian brother has been called away with a client commitment, so he can't add that final West African spice. So on this call, I'll continue to say that South Africa is the biggest registered GDP that is registered on the call. So if you can just give it about 3 minutes and then we'll go live and we will jump into our Q&A and we will start with most likely Botswana. But thank you for your time and attention. I hope you've got something cold and refreshing to sit and enjoy the evening with us. I'm definitely in the 30 degrees that we have here in Harare this evening. I'm going to be refreshing myself. So I will join you again in about 3 minutes. But thank you. Stay logged on. We can have conversations and enlighten one another. So real estate has been pretty much part of my life every day since I left school in all of those, and no one's counting, but that was in 1991. And it's just given me so much fulfillment to see how others live, how economies develop, and how we work and plan cities. So this is a light-hearted conversation. It's really giving a helicopter view on particular markets where people come in and feel free. If you want to pop a question in the Q&A, you're welcome. If you want to raise your hand, you're welcome. So absolutely feel free. I promise you, I am not Baleka Mbete, and I will not throw any members out for any unruly behavior. But we've done this a couple of times and we've had a lot of fun. And most importantly, we are educating one another. So while I've got my other panelists to come through, I'm going to kick off with the conversation with a dear brother of mine. So if you follow me on Twitter, and I'm there as Kura Chihota on Twitter, I'm always talking about money is moving. And money is moving is the euphemism I use when people are making investments. Real estate, as you know, is never static. We're either investing or redeveloping or doing something new. Right here in Harare, I'm quite excited that we've put together a new listing. We're listing the second REIT to go onto our stock exchange. So we're a bit pressed for time on that. So I'm going to be asked to be excused at 6 o'clock on this call, and I'll leave you in other capable hands. But in the meantime, we're having the conversation with those who are available. So Meneer Kgoshi, are you there, my brother? A valuer-in-chief in South Africa.
Good evening, Kura. Good evening to everyone joining us. Trust you are well. I'm fine, man. Just battling load shedding where I am now, but I try to improvise. So if you see camel and probably an elephant passing behind, don't be too alarmed. you must know I'm squatting.
No.
And then I'm fine, man. I thought I should spice up my look. I've got a Christmas tree behind. I never understand as to the reasons why we are decorating for Christmas so early. Or is it us waiting for the Christmas? But yeah, let's wait and see.
No, the retailers are trying to push up turnovers, my guy. So if you're in a Christmas mood and they're playing Christmas carols, you start spending early. So my brother, over to you. I don't know if you've got a presentation or if it's going to be a Q&A between you and I on what's going on in that particularly deep market called Mzansi.
I think let me not have a presentation on. I'll just mention a few points. Then I suggest then thereafter you and I can have a Q&A.
That's perfect.
I thought I'd sent my presentation. It appears that since I was out in the wilderness, he's still here with me. But just to try and go along with the guidance as given in terms of the points to cover. Number one, in terms of what is happening in our market, what we have seen is that there's been intro of some international players on property development side. Like for instance, in the Western Cape, they are looking forward to having the Amazon development going up to completion, which is good news because at least someone is saying, I'm watching you guys, you are doing something good, I can come and invest there. Although we all know that it was not a very welcomed site as such, because people are contesting a few things where Amazon is concerned, like labor issues and stuff like this. But nonetheless, Amazon is coming up. We are glad to have them joining us as a property developer in the Western Cape.
Can I just pause you there to put a little bit of color on that? For our members who are listening right now, I understand that is an Amazon Africa HQ, and they're putting in offices there by Black River. Is that correct?
Correct.
Excellent.
Correct. Yes.
And then they're following that up with a physical presence where Amazon, as we know it elsewhere in the world, will then be coming into the South African market and putting pressure on the likes like takealot.com, and who else is in that space?
There's Alibaba as well that is all playing in our space. I read an article last week. I saw that they were giving some awards locally. BCX is one of those that got an award for being the host of their server in the African space. That is Alibaba. So you will have Alibaba, will have Takealot, and will have Amazon. And I suppose it's good news for us as consumers because there will be competition for Takealot, which appears to be really running away with it.
No, thank you for that. I'm cutting up my credit cards right now because Black Friday is coming and that could end up being a disaster.
Yeah, no, it's advisable. Either you cut them or you give them away. But be careful that if you give them to someone to hold them for you, you'll be surprised. Lately, I see in South Africa, we've got too many motorbikes delivering everything for us than before. So the moment I see a motorbike parking at your driveway, I know that you're okay. Financially, you're doing well. Why else would you have a motorbike showing up?
Sure, please go ahead. Sorry, I interrupted you there. Carry on. Thank you, sir.
Yes, I thought I should mention the Amazon development as one exciting thing to see. Other than that, having done a few valuations now nationwide, I've seen there are several developments that are coming up of convenience centers. I suppose the convenience centers have proven to be the cream of the crop even during COVID, where guys preferred jumping out of a car, jumping into a shop, grabbing a loaf of bread and some milk and running back home without having to walk through a super regional like Los Angeles City and the V&A waterfront. So as a result, convenience centers have done well, and there's quite a number of them that are coming up now. Just to mention maybe about 2 or so of them. There is a 19,000 square meter odd center that is coming up in the Eastern Cape, and I know there is one coming up in Vryburg as well, about 22,000 square meters. So it goes to show that indeed the guys who are playing the convenience center space are doing quite well, and they are willing to go the extra mile, because at some point the aftermath of COVID will be turned around. We will still have to live our normal life. We have not normalized as yet in the true sense of the word, but generally we are doing okay. So I suppose having those developments coming up, it's a sign that we are not doing too bad. So they are popping all over. I saw there's one in Polokwane, Limpopo as well, in the middle of town, that was built by the Murmal Group. I'm not sure about the size, but I don't think it's more than 20,000 square meters from what I've seen. So, like I said, countrywide, they are popping here and there. The other thing as well that I've seen as well is that the Competition Commission approved the sale of I think it's 5 centers that were owned by bosses to a tune of about 3.6 billion. So for new investors and whoever cares to listen, it could be a good opportunity, but you know, at that space, chances are that someone already is lined up to take those over. And again, I know there was a sale of a 67,000 square meter, I think, that is Table Bay Mall in the Western Cape as well. So there's quite some activity in the retail sector where the centers are concerned. And I know, Kura, you being a player in the retail space, you would know that seeing sales of those taking place is an indication that the market is somehow moving, hopefully to the right direction, and someone is willing to say, I'm willing to take it over and see what I can do with it. So with that said, I can safely say good times are ahead. It's still a bumpy ride, I suppose, but good times are ahead. The one point that I was talking to some of my mates about is that townships are not getting the right seat on the table where retail developments are concerned. Although most of these convenience centers are now found in most of the townships, but I still believe that we could be doing more in really recognizing them as some of the locations, desirable locations for upcoming developers. It's interesting to see that the guys like McCormick and them are really playing that space, and they're going quite fast as it as well, because they've got centers that are available, either be new or refurbished, and they're doing quite well. So those are some of the movements as we see them in our market. The most difficult thing, though, above all that we can mention with South Africa is the interest rate hikes, because during COVID, we had the lowest interest rate of probably in our history. Now we are, every time we hear them talking about the Reserve Bank, you really wonder as to what is the worst that can happen. But I suppose in them trying to really arrest the inflation, they have to do that. But it's not good news, unfortunately, for the property space, because you can imagine even guys who are in the home loan space, like a typical family willing to buy a home for themselves and their kids. It's a challenge, because if interest rates are going up, affordability becomes a challenge as well. So those are some of the points that I thought I should mention. Unless you've got a question, Kura, I can go to my next point. But those are the highlights that I've realized. There's a lot of movement in the retail space, developments, and also that story with Amazon also pitching up on our shores.
No, I appreciate that. In the home loan space, I'm always blown away by the scale and the volume of developments that are being done, be it a Summercon, be it a Baldwin. My maths always boggles me, and I say, where do all of the people who are moving and taking up these units come from? What's driving that sector of the market on these new build sectional title apartment blocks that are happening in your country?
There are a few factors that one can mention there. Some of those factors are, you find that, let's use the example of Johannesburg CBD as an example. In Johannesburg CBD, over time, there's been a conversion of some of the office space that has been converted into apartments. The challenge with that model is that in town, there are no amenities as many that one would like to have where you are raising a family. For instance, having a crèche nearby, having a church nearby, having a park, because you are in the CBD, in the middle of town. Those things are not there. So the moment one says there's a development not far from town, like the Baldwin one that they had now next to Waterfall, the uptake of those tend to be at a very high pace, because people are finally finding something within their price bracket and also coming up with all those amenities that a normal family would desire to have. Those are some of the buyers that we see taking up those. The other one that we are also seeing is, remember, generally there's an issue of accommodation South Africa wide, where several DFIs are also involved in trying to turn the situation around. So there are schemes available where they can assist you in buying an apartment for you to occupy with your family. So there's a host of factors that one can really pinpoint as to the drivers of that change where people are moving into these developments. But you are right, though, by saying that those developments are out there, and for some reason, someone is watching and really running in and occupying them. By the way, it's not only playing itself in the sectional title space. You find the same even on the sort of middle to upper class type of developments, where the moment the development comes up, people rush and take over. I was in the East End, in the Phosphorus area, not many days ago. There's a development there called Sky City. They don't have the biggest of the property sizes. The stand sizes are quite small. But interesting enough, on a turnkey development basis, you find that almost the whole stock is gone. You get there's a big signage written sold out. And that time you're talking about over 800 units. So which shows that definitely there's a need for accommodation. We could do better if we were able to manage our interest rate. But as long as it goes up, it keeps those poor people who are willing and able to buy, it's keeping them back for a while.
No, I appreciate that. All right. What would you say has been the greatest challenge in the property market in South Africa for the year 2023?
The biggest challenge that we are seeing is the energy uncertainty. That's a huge problem, because some of the retailers like your Shoprite and Pick and Pay, the big ones, and Woolies, wherever they find themselves occupying space, they have to go to a point where they have to procure either be it a grid-tight type of a system where they'll have commercial inverters, or they'll have generators that they're utilizing for them to really give them power in the case of power outage. So load shedding remains the biggest, scariest thing that we have ever found ourselves in to go through as a country, which has really direct effects on the property market. But the one thing that I've also seen that tends to play out almost nationally is the issue of operating cost with specific reference to valuation rolls. I've seen that in several municipalities. It's happening now in Joburg. There's been some very serious uproar where valuation rolls are concerned. Because remember, with valuation rolls, directly talking about your rates and taxes, it may not appear to be much when you talk about residential properties, but if you take it on to a commercial development, let's say, for an example, the V&A waterfront or Sunshine City, if that valuation is not done properly, inverted commas, the type of rates and taxes that those guys are going to be paying, it's a whole crazy amount, I can tell you that. So I've seen that in several municipalities, with Johannesburg being the most notable of late. There is quite an uproar where rates and taxes are concerned. And the interesting thing is that for the first time in the longest of time, the uproar is not coming only from the commercial property side. Even us who are owning a small house here and a flat there, an apartment there, are also part of the chorus as well, making noise about it. So, and I've read somewhere where Sapa was also mentioning that if we don't get our valuation rolls to be done correctly, it's going to scare away people who are coming in for development, because as a line item is now starting to show double digits on the property expenses. So we need to somehow get it that right as a market in South Africa.
Thank you very much for that. I've just got a question coming out of the States. Ali Mutangi is asking me, he's saying, how does a diaspora African participate in the South African property market? Are non-nationals allowed to buy property? Should they be looking at buying property? What's your take on that?
Our property laws in terms of sale and purchase doesn't really. It's not difficult for a foreign national to come and buy. You're welcome to invest in South Africa. I know several companies and several individuals have done that. And there are a few things that you can do if you come to South Africa where property is concerned. Like, for instance, there is a development that came up in Cape Town. No, it's Stellenbosch to be exact. It's a student accommodation development worth R1 billion, a whole R1 billion for student accommodation, with units starting from about 2 million to the highest just under 5 million. So in the student accommodation space, there's a need for people to invest there. So I would advise any brother or sister who's out there to really visit us in South Africa and see where you can put your money in. There's definitely a few things that you can do. definitely you are welcome here. Our laws are not. We love our brothers in the diaspora. You are welcome. You are welcome to do something with us here.
No, I appreciate that. And on a personal note, I came down to Joburg late September, and I saw a development going on in Randburg. I tweeted from that building and put people in touch with the agent down there in Johannesburg. And so far, we've sold about 13, 14 units to Zimbabweans in Zimbabwe, deciding to invest in South Africa. It's quite a simple process to go through. And I think for value preservation for Zimbabweans looking for investments outside of Zimbabwe, South Africa has been very, very friendly on that. But yeah, I just wanted a broader opinion on people doing that. But it seems from start to finish and even fundraising is quite a smooth process. Kudos to South Africa for being that organized.
Thank you. You're welcome to invest here.
Great. So in Zimbabwe, we have our currency being volatile and things happening. So on our listed companies, we often have an unpleasant conversation around valuations. So Zimbabwean property trades in US dollars, but our valuations and our annual reports and currencies are usually reported in Zimbabwe dollars. So auditors take a different view and they say, look, we're really battling to understand the financials as presented by the valuers currently. What sort of challenges are you having in providing valuations in South Africa, or is it just plain sailing?
No. It's a tough terrain to really write on, Kura. It's not smooth sailing at all. I will give an example of evaluation that we're involved in the Northwest. You wouldn't think that you'd find difficulty in a somewhat rural province of the Northwest. What happened is there's a convenience center there, the towns there. What has happened is in trying to put value, we found that the valuation role that the municipality had almost doubled the value of the center. As a line item, you incorporate that into the expenses, into your valuation. You put the value as you have it in line with the market expenses as you have it, because you can't do much with the valuation role is being published. And unfortunately, the poor property owner didn't contest the value in a form of an objection. The value came lower than what it was when they initially had a facility on it. So it became a very interesting conversation to have, because now it appears like you as the valuer now you don't know what you are doing, only to find that when the window was open for the property owner to challenge the value in the valuation role, the poor guy was not informed and was not even aware that they could do something about it. As a result, we found that the property faced a devaluation of sort. Now, talking about valuations in general, what we have seen is there's an improvement in terms of vacancies, mostly on the retail side. They are still high, but they're improving, and an improvement in the vacancy rate means positive numbers in terms of value. And we are also seeing capitalization rates as well as slightly, they are reducing slightly, they are starting to look good. There are areas now where 10% is not an unfamiliar number. I'm still shy to want to see someone talking anything below 9% or so, but I know guys who are in the banking space, they've seen more valuations than myself, and I've heard that some of those numbers were applied there, but I'll be wary to really go that low. But generally, in terms of the cap rates, the vacancies, there's an improvement, but unfortunately, the office market, there's not much improvement there. The hybrid model of working from home is still in place, with many offices remaining vacant. So yeah, some of the factors that are driving value, like I said, the cap rates, expenses, are that they are improving somewhat, but a bit slow though. I suppose it will take time. We are still really suffering the aftermath of COVID, especially where offices are concerned. But any other property type, especially industrial, is doing very well. Retail is sort of following, still struggling, but it's following. But the office one is the one that is being left behind more than any other. So guys in the office space are really making their wounds. I suppose the situation will turn around at some point, but I think it's going to take some time still, because even convincing people to go back to the office is also a challenge in itself. So let's wait and see. But so far, those factors that I mentioned have been seen to be the drivers of value. over time.
I appreciate that. So here I am. I'm going to abuse you as our registered valuer on the panel. What is a cap rate? Is it an output or is it an input into a valuation? Help me understand.
A capitalization rate, loosely speaking, when you're talking to people who are in finance, like accountants, they always say, but what is a yield rate? What is a cap rate? What is a discount rate? Look, maybe in answering you, let's look at it from a definition point of view. Others are saying you are best placed to determine a capitalization rate utilizing comparable sales of a similar asset that you are looking at putting a value on, which is the safest way of doing it. Over time, there are guys that have put models in place where they are able to run several sales nationwide and even go into a form of applications and them, like your MSCI, IPIT, Golden Report, and those guys. They've got more extra information available from their sources nationwide where they're able to publish capitalization rate. So to answer you directly, are you saying it's an output or is it an input? It takes into account a few things. For instance, let's say in Pretoria CBD, as an example, we are doing evaluation of an office block. We did evaluation there recently, in not more than 3 months ago, of a center. Is a shopping center on the ground floor, quite big for that matter. And then it's got offices on maybe 2-3 floors, and the rest of it is apartments, flats. So it's got three types of uses: retail, offices, and residential. When you look at it, the one thing that you also need to think about is the factors that are going to influence that: the location, the market itself, and the risk that one takes in occupying a development of that sort. That property is owned by a listed fund. I think it's Octodec, if I'm not mistaken. Yes, it's Octodec, run by City Property. So when you sit and have a conversation with them, as a client of ours, we sit and say to them, the capitalization rate based on whatever factors that we are considering in determining it is this much. They say, yeah, we hear you, but are we not being punitive here? Or are we not being too gracious here? Are we not really being too positive there? We are able to have that conversation on the back of what we have based on market information. But remember, also what you also need to be mindful of is the type of investor who's likely to be the buyer should you put that thing out in the open market. So to answer you directly, it's not a simple exercise to really put capitalization on, but as some of us, unfortunately, making a living out of values, we unfortunately have to be the ones that go ahead and put that number on.
Thank you. I always found it easier lecturing. I've lectured at WITS on the WITS Plus. I've lectured in the postgraduate at University of Pretoria. And the capitalization rate, the best way I've come to try and explain it to people is that it's an input. It's a rate that you're going to use for a given outcome. And the outcome is an established rental or a future rental. Their leases, yes, their expenses, that's going to give you a net income. Then you're expressing a value on how much that is worth. And that sounds like a funny question, but 10,000 square meters let to ShopRite is very different from 10,000 square meters let to Kura and Sons and all the rest of it. So the cap rate tries to adjust a whole bunch of factors. What is the escalation? What is the security? What is the ability to pay and all of that? So it is an input into a valuation going forward, but it is always back tested, and it's an output of looking at historical sales to say, what sort of value does the market put on these things? How does that sit with you, Mr. Valuer?
No, correct. I agree. You are spot on with it, because it seeks to assist you in adjusting those ills that are not within your control. Like we are saying, Kura and Sons occupying 10,000 square meters versus Woolworths in South Africa occupying 10,000 square meters. The amount of risk that you are putting there, we are likely to want to believe that Woolworths will still be around for quite a while, whereas Kura and Sons can bet the lottery, win 100 million and go and relax on the beach somewhere in Bermuda or the Bahamas. So as a property developer, then I'm left now with 10,000 square meters of vacancy now. Then what do I do? So you are right there. Definitely, it seeks to try and balance those type of factors.
No, I appreciate that. Thank you very much. So I'll continue.
Although I must say it's a moving target. I know most of my finance colleagues do not like value add stats specifically for one of the numbers that they don't like having a discussion on is that specific one. But unfortunately, it has to be done.
Sure. No, and I'm always envious when I'm not in South Africa on the depth of your market and the quality of research. So you can pick up the Ruda report and you can see published. So at least you've got a basis of comparison or to start the conversation. Here in Zimbabwe, we've got listed players, but their sales are so few and far between, and the likelihood of comparables, we don't have super regionals, let alone saying 10 of them have traded, and of the 10, these were the ranges that they were in. So it becomes almost anecdotal when we try and put these numbers out there. But that's the challenge of a small market. It is what it is. So we're almost closing up the year. What is really exciting you about 2024 in the South African property market space?
Excited, yes, we are, because we know the election year tends to hype up a few things, but also due to that is the sense of worry. During the election year, people are not sure, and the market tends to follow as well, where we are losing value in the rand and struggling to really stabilize our currency. And that the one thing that I'm paying attention to right now, I'm following that case very closely, is the case of these guys that leaked the rent, that devalued the rent intentionally, the likes of Citibank and Standard Chartered. The reason why I'm paying attention to that is that I'm really keen to know how best we really manage or try and keep that type of behavior not happening anymore. Because if we really let people do that, or corporations do what they did, and it devalues our rent, we are in for a tough time, because our economy suffers as well, because one man decided to say, look, we can actually pocket some more for ourselves if we do this. So I'm told I hear that the Competition Commission rather is doing quite well in trying to follow that up. As to will they win it in courts, it's something else for us to see. I'm really excited to see how that one pans out. That's the first thing. The second thing that I'm paying attention on is really about the office market. I'm quite keen to see what sort of programs or ideas can people come up with to try and turn the tide around, because honestly, the office sector is not doing too well. And there are several guys who really invested a lot in the office space. So struggling with such high vacancies now is not a good thing for them. I feel very bad for them, poor guys. They're not doing that well. So it's one of those things that I'm really paying attention on, because if we manage to see the tide turning where retail is concerned and industrial are concerned, I suppose those players that are really the game players in it, the big game players, should be able to come up with plans of sort to really turn the tide around. Because I promise you, it's still difficult now finding a random guy who runs a legal practice saying, I'm working at the office now. They are still choosing to work from home. And as long as those type of ideas are still being preserved, the office market is going to suffer. So pay attention to the office market. I'm really quite keen to want to see what happens to the hybrid model. Will it still sustain itself in the coming year? Or will we get some certainty after the elections and guys will start now be investing more in office and going back to the office as well? Because maybe our economy will starting to run faster. Because honestly, an election year is not a good time to be in until you are past the elections, because there is uncertainty across many things. There's policy change and all those, some of them affecting property. Some of them affecting property development, some affecting property sales. Like, for instance, the question that we asked earlier about someone being able to come and buy property in South Africa. We do not know that post-elections, whoever comes up and takes over in terms of power, let's say it so happens that the ANC is no longer in power and someone else is in power, how will their policies affect property development and investment for the international players? So It's an election year, Kura and my colleagues. Unfortunately, we can only wait and see. But chief to it all, for me, I'm really quite keen to see how the property market turns out, specifically the office market, my apology.
I was in Joburg day before yesterday, and I've been quite surprised to see the scale of conversion from office to residential. Abo Sunning Hill, Rivonia, even out Kobruma Lake and what have you. That market seems to be quite strong, where people are taking a view where they want to be in the city, but are not necessarily buying, albeit that people buy a lot of that Bowen kind of property, but there's strong rental market. Are you seeing this as the natural direction for the rest of the office market to go, where C and maybe B grade offices that have these massive vacancies end up being converted to residential? Is that sustainable?
I think it's sustainable. We see it's quite prevalent here. I think it's sustainable because I've seen it in Durban, I've seen it in Cape Town, and I've seen it in Joburg and in Pretoria as well, but mostly in Joburg. I think I don't want to say it is going to be the way forward, but it appears to be sustaining itself, meaning that indeed whoever is doing that model is doing quite well. There's quite a substantial that development in Joburg in what they call the Jewel City, where they used to do the diamonds cutting and whatnot there, mostly on the eastern side, towards Mabone in Johannesburg town. The likes of Mafadi, property manager, and them are involved there. I know they turned quite a number of offices into flats, and took old flats and turned them around, created very nice apartments, to a point that even the retail market followed as well. You find the likes of Woolies there, and ShopRite and Pick n Pay there, also occupying space. So indeed, you are right. They're converting an office block into residential apartments. You are likely to have tenants overnight lined up to take over that space. So yes, it's sustainable. It may appear to be the easier way out, but what I've seen is that it's not necessarily in the middle of the city where it happens. It's sort of on the outskirts, and it makes sense as to why, because most of those offices are there would have been grade C or D, or even out of a grading point that can be turned around. The trick is you cannot only turn it around and not offer amenities, like I said earlier. If you're going to be saying, let me turn it around, unfortunately, you are almost without choice. You need to make a plan where amenities are concerned, which is why these guys are now creating a park for kids, bringing the retailers as well, to make it as easy as possible for you to live your normal daily life as a family as well. So yes, you are right. It's happening. Randburg has it, Cape Town has it, Joburg has it, Durban has it. I was in East London not long ago. It's not happening there. I suppose they've got a different appetite to the rest of the other bigger cities. But your Gauteng, KZN, and Western Cape are following suit.
No, I appreciate that. So my Zimbabwean experience is that we're currently doing a fundraise. We have 5 buildings in a listing that we're bringing to the market. We're bringing 5 properties that are CBD based, but all of them are within tourism precincts. So downtown, it's near, the ones in Harare are near 2 5-star hotels. One is the Monomotapa, the other one is the Mikos Hotel. And we are pioneering the conversion of old office buildings and making them into long stay apartments. Our city council this side couldn't quite get their heads around leaping directly from office use to residential use. So our development permit is for the creation of long stay apartments. And we're in the market right now. We will do our IPO launch on the 7th of December. So I look forward to reporting back to you and to the meeting that we've had an oversubscription and things have gone well, but it's a trend. And our reference point was, look in South Africa. You can look at black brick hotels. You can look at Live Easy. You can look at a number of players who've entered that space.
Nice one. You guys are doing well. I suppose as well, the positive to that is that you are turning around probably, for lack of words, a dormant type of a building. And you are creating value for the municipality, because once it gets to be turned around, it increases in value. they also make money from the raising taxes. And we all know that raising taxes is one of the biggest sources of income for most municipalities. So unlike having a building being hijacked and being utilized illegally, we are better off now opening it up and saying to developers, come, let's have a conversation. How can you best assist us in turn this thing around? So I've seen Joburg is trying hard in doing that, but I saw that over time they sort of relaxed in their pace. When I was still with the Gumere there in Bijalo, maybe around 2004, 2006 or so, there was a drive from the Johannesburg mayor at the time where they were even relaxing laws where rates and taxes are concerned, whether they will give you tax breaks for quite a while until you turn a certain building around, be it into apartments or a combination of retail and that. And they did quite well. Those properties there around Marshalltown, where the Standard Bank offices are concerned, are situated. Most of the buildings there got to be turned around from being residential, from being offices into residential. They did quite well, but over time, I think they relaxed. They then got themselves suffering through some malfeasance who somehow sneaked in and hijacked some of those buildings and utilized them illegally. And then now it made the location less desirable for guys who are willing to stay there. But I see they are doing quite well in trying to turn the situation around. Yes, you are right. I'm glad you guys as well in Harare are doing the same, because many people they are looking for accommodation, and the more we can give people a choice in terms of cheaper, affordable accommodation, the better for everyone concerned.
Thank you for that. For those tuned in and listening, can you explain to us, because on the continent, I would say by and large, property rights are well secured and well entrenched. What is this thing called South Africa about building hijackings? How do you hijack a building? It's immovable property. It can't go anywhere. What's the dynamic around that?
What happens, the simplest example I can give is someone had a whole entire office block in the CBD. Let's say maybe the Department of Health and Safety came and had problems with the issue of access and lighting and whatnot. They want the property owner to say, please comply, your fire rescue plan and all that is not in place. The building ends up now not having tenants anymore, because remember it was an office block. Everyone now walks out, leases are cancelled, or the landlord decides to say, guys, please vacate. Apparently my building is not the safest. While the poor guy walked back trying to think as to what to do with the building, Kgoshi and Kura, the smart ones, now walk in and they occupy the building. The property owner is somewhere in Harare there. He knows that he put a big lock on the door. There's no one accessing the building. They then go in. What they then do is that they will take whatever is in there, create rooms, makeshift type of accommodation. It could be rhino board type of a gypsum type of partition, or whatever the case may be. By the way, the one with which is partition with gypsum, and that is the best case scenario. It gets to a point whereby you've got a mkuku inside a whole block of offices. Let's say it's 5 floors. You find that they try and sneak in as many people as possible. Those people there, they appreciate that they're paying very less for accommodation, like 600 Rand per month or 1,000 Rand per month. And remember, you are living in the middle of the CBD. So the distance between you and work is a walking distance. So if someone says to you, go and live at the Mukuku somewhere in Davidton, or somewhere in Soweto, or somewhere in Tembisa, or somewhere in Ivory Park, you're going to be paying 1,000 Rand renting a Mukuku there. Whereas you can rent the Mukuku in town. It doesn't have electricity, as we know. You've got 1,000 Rand that you are paying in accommodation, you are walking to work. You are saving the extra 1,000 Rand on transportation. So as a result, you find that the uptake of that is very high. And the people who are now renting those are not even knowledgeable that they are not even knowledgeable that the person or the people who are now their new landlords are not the owners of the building until there's disaster striking. Then you get to realize that indeed this building was occupied illegally. But though, when you look at it, I cannot say that municipality is not aware about it. Between you and I think someone somewhere is not really paying attention to these things, because you can't catch it too late to a point where you only get to know that this building has been hijacked now that there's something going wrong with the building. So, a direct answer, a hijacked building is a building that has been left alone by the owners. Someone thought they could turn it around to create some makeshift accommodation for the disparate people who are looking for accommodation in town, who want to work and save money from transportation and stuff like those. So they are quite prevalent. It's not only in Johannesburg. It's happening across many cities countrywide. Some of them are doing quite well in trying to nip it in the bud, but generally that's just a problem for everyone is there. So most of the time they take advantage of our brothers and sisters from the diaspora. You find that a poor guy comes from Bulawayo, comes to Joburg, he's doing maybe let's say handiwork, he's doing painting or carpentry. He makes, let's say, about 4,000 rand a month or so, give or take, just for argument's sake. If he pays 1,000 rand in accommodation and is able to walk to work, it means he's saving 100,000 rand. But if he had to run the same size mukuku in a township, you find that he's paying 1,000 for that makeshift house that they made for him, made of iron sheeting. He now has spent extra 1,000 rand for traveling. So it's 2,000 out of the pocket. Out of 4,000, he only left 2,000. So there will always be someone willing to rent that accommodation. Yes, guys are aware, and that's why they are willing to take the risk of hijacking a building. By the way, it has been proven that those guys are faceless. You can never say this is the man who hijacked a building. But for some reason, the buildings are hijacked. As to how are they paying rent, that's an argument for another day. Because I suppose the guy who's collecting the rent forms part of the hijackers or is the manager on behalf of the hijackers. That is the story.
Thank you for that. It always breaks our heart on the continent when we see another fire in the Joburg CBD and we hear of the deaths of brothers and sisters on that side. It really, really breaks our hearts. So on your South African side, let's say our team here on the call, all 24 of us, got together and put together a stokvel, and we came with $1 million US, something like 20 million rand. What would you suggest we look at, put it in? What are the opportunities that you're seeing, my brother?
The two major opportunities that are there, one is student accommodation. There is quite a high need of student accommodation. Like I mentioned, the example of the billion rand development in Stellenbosch. Obviously, that one is much high end, with an apartment going for between 2 and 5 million. But in other cities like Devon, I know there's Nelspruit now that came up with the new university as well. There's definitely a need for student accommodation. I would advise that you try and play in that space. It's turning out to be a bit turbulent now, but it's still quite a creamy one to be in. The next one is the one where also residential is concerned, where you can convert a block of offices into apartments in some of the cities. I think those ones are doing well. The residential one, I know there's a couple of guys who are now financing people in the townships where you've got an old matchbox, what they used to call a matchbox in South Africa, is the former previous government sponsored house, which had 4 rooms. I know they're trying to turn that one around where they walk in and finance you in putting extra rooms for accommodation. You rent them out and you pay them slowly over time. I'm not too keen on that one, but I know there are guys who are enjoying that market. So the two primary ones that I can say is student accommodation and converting office into apartments. Those ones are quite key because there's always a need for accommodation.
No, I really value and appreciate your comment on that big market. I think as leaders in the space, in terms of product development, there's competition coming hot on your heels. I've seen the Nigerian market. I see East Africa. So Nigeria, you talk about Lekki Island and the development there. If you go to East Africa in Nairobi, Tatu City, and the like that. But South Africa, by scale and by depth and sophistication, you guys are the leader. So I really appreciate you taking the time, and you've been one of my stalwarts in panelists on the series this year. I really appreciate you, my brother, and we look forward to remaining in touch with you and looking forward to your support going on. But before I let you go, I've got a question there. And it says, I have a question regarding the volatility of new housing markets and housing bubbles. What do you think is the security of the new housing markets like Midrand, Waterfall areas in South Africa?
Look, the waterfall area has proven to really hold value, contrary to what most of the guys in the property space thought. We thought it just the bubble is going to burst in no time. No, it has held very well, because I think it's also a combination of factors. The one thing that I think they got right there is how to combine accommodation from middle class all the way up to the super luxury. As a result, I suppose by doing that, they catered for everyone who can afford to put a loaf of bread on the table. As a result, the market proved to really hold value. So yes, there are places that we have seen countrywide where new developments failed, residential developments failed. There is a whole host of reasons as to why that is the case. But for those that have really worked out well, I think we need to be thankful to the developers in putting a combination of factors and getting it right, like the waterfall one, which to this day is still doing very well. I know guys who are doing valuations there on residential properties. They are doing quite a lot of valuations on a daily basis, and the values are looking quite good, which goes to show that indeed that market is holding very well.
No, thank you very much for that. I'm inviting anybody with any other questions to pop them in on the chat there, and then Kgoshi and I will be able to answer. Technical reasons, we haven't been able to raise our Botswana and Uganda ladies, and Nigeria had also dropped off the call. They had a client commitment that pulled them in at the last minute. So I regret that we won't be hearing from Nigeria at this particular moment. So while I'm waiting for questions, I sit here in Harare, and it's been a great pleasure to travel the continent this year. I haven't done as much of it as I need to do to keep fresh and on point, but our Zimbabwean market has had a tough year. 2023 has been an election year. So as Kgoshi had mentioned, things slow down, but elections in Zimbabwe have another flavor to it. So even post-elections right now, you can say that we've had the elections and we're moving forward. We've had a situation of political uncertainty, and it's not who is in charge, but it's which person is in charge. So we've had our elections, then we had installation in parliament, we had mayors being appointed to run councils, but now we have this business of recall. So our mayor, as was appointed, has been recalled, and they're appointing a new mayor. So that makes things difficult, like right from a development kind of level, when you're doing a redevelopment or looking at a rezoning, and the corporate governance process is that you need a full council meeting. We're now delayed. When somebody new comes in to sit and have a full council meeting to approve something, there are questions and there's a momentum that's lost. So for politically, that slowed down our property market. Our property market is driven entirely, and I stand to be corrected, I haven't seen all of the deeds office transfers that have gone through, but it will be the minority, and it will probably be a sale from a local authority to somebody on the housing waiting list, where that sale is going to go through in Zimbabwe dollars. I would say by volume, at least 98% of sales are conducted in United States dollars, and we don't have deep and established financial services providers. Our mortgage numbers are tiny. We have less than 5,000 active mortgages as a country. So people are transferring things and selling for cash. When you do a deal at the 200, 300,000, you're meeting at the lawyer's office or at the bank or in a safety deposit box, and you're transferring properties for cash. We've seen the market get some sophistication. So pre-elections, the government rewarded senior civil servants with nostro mortgages, or US dollar mortgages originated locally. Those were anywhere from $300,000 to $500,000 being granted to senior civil servants and judges. That distorted our markets in the urban areas, where because there was ready finance, they absorbed a lot of the stock in that sector. So anything that was on the market from 250 to 350 really got gobbled up. And then once that got gobbled up, then the demand was still there. So properties that should have been maybe 200,000 were starting to be priced up and bid up by competition, by people wanting to draw down on those mortgages before the opportunity closed. Not to say that we don't have significant price appreciation in our lower brackets in the market. The township market, you will see that properties, 4-bedroom core houses are playing around at the $30,000 a unit in Warren Park or places like that. But if you've improved that and you've done the 200, 300 square meter units with 7 rooms in total, you're looking at prices that are firmed. Those are about $35,000, $40,000 and remaining like that. There's significant uptake, particularly for the older townships that have established deeds where people are getting employer-assisted loans. I wouldn't call it a mortgage because the tenure is not as long as 20 years that you'd be used to in South Africa, but people are acquiring employer assistance to be able to do that. So our market is largely a save, buy a stand, save, build a cottage, save, build the main house. So that's the Zimbabwean dream as we've seen it participating on the ground, and people are taking up that. There's no urban area that is not surrounded by, on the peri-urban, where there's significant development of what was farmland that's now going into higher and higher density. Our high density is now going down to as low as $200 a square meter. There will be the formal market that gets a subdivision permit and is trying to do it properly. So the council, it is against national policy, but it's a de facto situation on the ground. If you pick up a copy of the National Housing Policy, it states that provision of bulk water in infrastructure and sewer, so the trunk road, the sewer, the water, that is supposed to be a national government competency provided by the municipalities, and in theory, a developer is supposed to connect into that. But we found that to get a development permit, you are being forced to make significant investments in, if you're doing a scheme of anything above 500 units, you are actually going to have to provide the bulk of that. And then the salt in the wound is that you then turn it over to the municipality for operation. If you pull power from existing grid, Sasa is going to ask you to pull power. You're going to do your substation and your transformers, but once it's in situ, it's over to them. So that's a bit of a drag that contributes to the forever ongoing conversation that Zimbabwean real estate is very expensive. I think that is a cost buildup of a lot of things make it expensive, let alone just demand. So by comparison with our South African cousins or even our Zambian cousins, we spend far too much per square meter to get something going. Where we going for 2024? What excites us? I think that the development game is entirely strong. We are getting developers now at scale and with energy. So some of the developers, I can point to the northern suburbs of Harare. Clusters seem to be the game for people to be playing. Family sizes are getting smaller. People are getting older. So my mom and dad, God bless their late souls, they bought a property on 10,000 square meters. It's not likely that in the next 5 years, one house is going to sit on that much ground in the northern suburbs. The pressure already is on the road. Initially, subdivisions were coming through. And then after that, we've just had a cluster development done 3 stories up from where I grew up. So I take that as symptomatic of the rest of the market, where the pressure and demand for affordable units and different units, where instead of big family homes with big families, people are now looking up for secure lock up and go clusters and areas like Venona, Mount Pleasant, and Marlborough, where there's existing sewer, where the developer can minimize the marginal cost of putting in a new unit. We're seeing development there. The uptake is anywhere from $150,000 US for a 2-bedroom unit to some fine work being done by new, young, and Black developers. They're pushing out product at the $250,000, $280,000, $300,000 unit. The uptake of that is largely driven by institutional investors who are looking to preserve value. Our stock market in absolute terms in Zimbabwe dollars has not preserved value as well as investing in real estate. So real estate continues to be a safe haven for our investors, and we still see strong uptake in any modern, well-finished product. So markets are getting discerning. We have improved residential stock. So the clusters are coming in with very South African designs. We've had our retail also moving up. We've had the successful listing, and it'll come up to a year. It's actually a year now. We had the Tigere REIT that listed this time last year. So its anniversary is imminent. It has performed well in terms of on an asset performance basis. On a vacancies, they've done quite well to have met, and we haven't had the final guidance on if they've exceeded or met budget for the financial year, but they've paid out 3 dividends on time and without any issues. So the model is working. I'm working currently with the team to bring a pension fund. They have put their assets, or 5 of their assets, into a real estate investment trust, and we will be listing that in December next year. So there's sophistication that's coming in the market. Over and above that, we're finding other players are trying to tap the capital markets. So there are 2 different players who are using what would be familiar to people on the African continent. I know it's the same structure in Zambia and in Malawi, where I've done some consultation, is the collective investment scheme, where an asset manager is a licensed fund manager and people are investing with them, and then those funds are being deployed into projects. So people are finding a safer route rather than going, call it naked, into direct exposure with a developer, where you're not sure that the development is going to be completed on budget, on spec, and on time. So people are using the asset manager route. So there are a couple of products that are in the market where people are able to take fractional positions. If you don't have the 15,000 to buy one stand once off right up front, developers are offering installments that may be 3, 6, 12 months. But then if you go beyond 6 months, they're starting to charge interest of maybe 1% a month. These collective insurance products, I can name them by name, something like Property X, something like Firmacare. These guys are offering products where for like a 9.5% return a year, or upside in doing developments, they're taking in subscriptions from investors. So we're seeing some sophistication in how we're raising money in the property market currently. Our expectations for 2024 is much of a muchness, where we have an economy that is largely cash-based and US dollar-based versus very short financeability. So people to retain value. Thankfully, we've had the pronunciation out of the financial powers that be that we will remain using the dollar until at least 2030. So that is comfort for trading for the next 5 years. But from a lending perspective, it makes it very difficult to put a business case where you're talking about, in South Africa, Kgoshi, if we're doing a student housing scheme, we would look for maybe break even and cash flow positive from year 7, or when we brought down the debt to a number that kind of makes sense. We don't have the luxury of those kind of timelines here in Zimbabwe. Touching on student housing, it remains a popular institutional investment market. We have had investors, a successful development done in Bulawayo by the NUST University. It was a consortium of investors in IDBZ, Old Mutual, Mines Industry Pension Fund, amongst others. They've created a facility for over 1,000 students in that space, and they're looking to replicate that model in another state university, Lupane State University. I know they're chasing that quite hard. Over and above that, the student accommodation market has by and large had an informal response, where mom and pops in the areas with houses near universities have extended and put on rooms that they've let to students. Sometimes disappointing standard, but that's where a lot of the uptake has been for students in the market, because the universities themselves don't necessarily have the capital to invest. I know the University of Zimbabwe, on their own land, they're doing additional student accommodation. Then some of our listed funds I know First Mutual is doing student accommodation in Chinhoyi and looking at it for Zhishavane. So there is some uptake, but at this stage, we don't have scale providers of student accommodation. Retail continues to be interesting. The retail pressure is on, where we see decreased volumes going through our official retailers like OK and Pick and Pay. Their volumes are, because of the pricing difficulties between an official rate and then the parallel market rate and what a dollar can buy downtown in the informal. Kgoshi, I'd call it a spaza. Your spazas happen in the township in Johannesburg. We've got those spaza shops right down in the middle of our CBDs here in Zimbabwe, because a retailer, a Pick and Pay, has to pay official rate. They have to publish a Zimbabwe dollar price. If they asked for a price in Zimbabwe, they have to pay VAT on that. They're paying full taxes. They're paying the landlord rent. They're paying staff at union wages. We've had an informal market totally mushroom up, where people are cutting out a lot of those costs and importing finished product directly from South Africa. We call them the phenomenon of runners, where you send somebody with your dollars, they convert them into rands at 18, 19, 20, and then they buy stock, they bring it in, not necessarily paying duty on the stuff, and every household is really battling to make ends meet. So there's phenomenal support for these unofficial channels. Great for the household, not so great for the formal economy and our retailers, both OK and Pick and Pay. They're listed companies. They have to report their results. Their volumes are under pressure and their margins are absolutely under pressure. Our office space market remains difficult in the CBDs for reasons of just crime and grime. Being downtown is not the most pleasant environment, particularly when we have a power cut or when it rains. For some reason, Zimbabwean drivers lose their minds and it becomes gridlocked when you don't have power. We don't have an organized supplementary system to have pointsmen to guide people out of town. But then even if you are in town, when there's power or water issues, it's not pleasant being on the 11th floor and having to walk up the steps because the lift are not working, and then trying to take buckets upstairs to flush. So the CBD product remains under pressure. The kind of offices that have institutional interest have a typical vacancy of about 40%. And then that 40% makes it very expensive to run because you're trying to collect your operating costs. So you're trying to recover your operating costs on a 60% occupancy. That pushes rentals, and that challenge means it's a vicious cycle that the lower quality product that you offer, the more expensive it becomes because fewer people are taking it up. The more you have to increase your prices, but then you decrease them to try and attract and retain people. So we've got a phenomenon where offices downtown in a pretty decent building that maybe 10 years ago you could describe as B or just under A grade, you can be renting that kind of accommodation in Harare under the current economic circumstances for less than $12 a square meter. We've had post-COVID, people are moving to improved product. So the offices, your lawyers, your banks are leaving the CBDs and they're moving out to environments where they can control these things. So I did a paper recently where 2 banks have already stated and taken positions outside of the city, but of recently in the past 6 months, 3 other banks have taken a view and have acquired and actually broken ground and are developing new office blocks for themselves, anywhere from 4,000 square meters to about 8,000 square meters. And that is really, I think, an existential crisis for the city of Harare. It really needs to decide who it needs to serve and how it needs to protect its rate space. So we have that discussion in various forms with the city, where a landowner has very little choice on how and where to move his offices, but repurposing them. And the fund that I'm doing investor relations with, we hope we are leading a path and pioneering and creating value for others to follow, in that although it might not work as an office block, an older building with a good skeleton, a good structure can be repurposed and used going forward. Our industrial market remains very strong and robust. We always have the 800-pound gorilla being the tobacco guys. When the season is good and we have procured a lot of tobacco and we're processing it for exports, we get very good rentals out of warehouses for tobacco storage because they are earning in dollars. They're able to pay landlords in very green US dollars, and rentals for that can be as high as $4.50 a square meter, whereas the older stuff, you get the $2.50 kind of price range. A total outlier to what we think and have seen and know as normal in the industrial market has occurred in the northern suburb of Pomona, where the industrial node there has absolutely exploded. I remember doing a transaction at about $60 a square meter for land in Pomona to do a development where we're creating sectional title units for industrial rental. That was 3 years ago. At this point in time, the latest development coming on the market is asking $265 US a square meter for industrial stands. And industrial stands are never small. Those are 2,000 square meters and up. So to get in 2,000 square meters at above $500,000 is significant. But it is justified if you look at the developments that get done on top of that, you see that we have mini units that are coming in at $150, $200 a square meter, or 150, 200 square meters, but the rental rate that's being achieved on that is anywhere 10 to 13. I think I had some pioneer rentals somebody was talking about at about $14, $15 a square meter. So as a property analyst, I always scratch my head and I say, wow, we're actually ending up with industrial uses paying a higher rental than office uses downtown. Surely we need to, as an industry, rethink this and create something that creates value for all of us. So I think that the industrial, that particular space has been an anomaly. It's been a phenomenal success. And those who saw it early have made great money. Coming into it now, I think if it's owner occupied, it may make sense. It is a much more pleasant environment. It is zoned for light industrial. So with light industrial, you are able to have uses that are amenable to the provision by solar power. So you can self-generate. If you're running lathes and welding and greater heavier industry stuff, Pomona is not the place for you because the power constraints are significant there. But if you are into warehousing or distribution or showrooms that are located there, it makes great sense, and people are taking up that space. What we don't have in Zimbabwe, and I still look forward to it, is the provision of institutional rental housing. We have our CBDs, our rentals have firmed significantly. For a studio apartment or a one-bedroom apartment, the rentals are easily 20, 30% up from where they used to be. And that is a cost push, and people are looking, and then they're moving out of town and they're going into the residential areas that are closer to town. And what was domestic quarters under the old created suburbs are now being rented by individuals. So the pressure is real. I think the only way to relieve that pressure is at scale to provide some sort of stock by an institution that wants to take a long-term view. We've had one of the fund managers, DatVest. They've invested in new product out in the West, where they've been doing flats for rental, but we don't have significant stock coming in, so prices remain quite high there. So I think I've touched on retail, industrial. Always in Zimbabwe, a bright spot will be our hospitality. And our hospitality, our demands and dynamics around Victoria Falls are akin to those of South Africa and Cape Town, where Cape Town is an international destination, a great vibrancy. We are ever increasing our air capacity into Victoria Falls, and we have had at least 3 new hotels and more planned in Victoria Falls. So that is a great shining spot in our tourism space, and we look forward to greater developments in that particular area. So for 2024, I'm expecting a continuation of the energy. Sadly, I don't see a great change in the finance availability, but Zimbabweans, as our South African brothers would say, ons maak 'n plan, we make a plan. and we find and squeeze and hustle for $1 to be putting into this cherished asset class. So that's the view from my side from Zimbabwe. I don't know if anybody else wants to contribute on that. I by no means hold the monopoly on seeing and having a view on what's on the market, but from my desk, that's what I'm seeing. I'm grateful for the work that's coming through. I'm looking for fundraising, doing feasibilities on studies, and I'm always keen to find out what other people are seeing and doing there. But I thank you all for tuning into this, as well as all of the other episodes that we've done, all 5 of them through the year on this particular platform. The platform is decidedly free, is decidedly in the evening, where we want to get the best brains as possible onto a call and share what we know and see. It's unfortunate that our other brethren, Botswana, Uganda, and Nigeria haven't joined us on this call, technical and client reasons, but we remain here. And I look forward to our organizer, and I give her massive thanks to the team at ACRE who put this platform on and allow us to come and share. So for your attention, for your support, for your suggestions, we thank you immensely. And Africa, please look after each other, look after yourselves, and let's honestly make a profit by putting as much real estate in as many people's hands as possible. I thank you for your attention, and I bid you a wonderful good night. Thank you so much.
Yes, guys.